welcome?
Yes.
Shall I do my welcome?
Yes, please.
Am I on?
Yeah.
Excellent. Okay. Well, welcome to Sunday morning at the Marxist Library. My name is Gene Rule, and I'm part of a working group of volunteers that has kept this forum going for the past 10 years. The forum itself, as you know, is a project of the Institute for the Critical Study of Society at the Nebel Proctor Marxist Library, which was formed about 20 years ago to further the library's goals of preserving our written heritage as well as supporting emerging struggles for racial and gender equality and for socialism. The members of ICSS are active in different aspects of people's struggles in the Bay Area and globally. Some of us are affiliated with specific political parties and tendencies, others are not. We respect one another, but we do not necessarily agree on all issues. Accordingly, the opinions expressed in our lectures, workshops, and publications are those of the authors only and do not represent a group consensus on the issues discussed. We are united, however, in our respect for the work of Karl Marx and our belief that his work will remain as important for the class struggles of the future as they have been for the past. And as a group, we continue to draw inspiration from the work of Karl Marx, including his 11th thesis on Feuerbach. The philosophers have only interpreted the world in various ways. The point, however, is to change it. And that's what we're about. And these days, many of our topics will deal in one way or another with the Corona crisis, which I don't have to say is changing our lives in so many ways. I logged in last night on YouTube to the Stephen Colbert, his substitute for the Tonight Show. And it wasn't funny anymore because there was no canned laughter. So you don't know when to laugh, don't know when he's being funny and when he's not. So we won't have that problem here because we know everything Alan says will be very profound and useful. So I think, Raj, do you want to give an introduction to Alan?
Well, Alan
before we start, there are some hands up. Do you want to ask if it's about the session or before we start, Raj?
Yeah, let's find out quickly what the problems are. Somebody's raising hands. That means they're having some issues with the program. That's the only thing we deal with, not questions about the subject.
Okay, we have 5102-829408 telephone number.
Yeah, go ahead.
Go ahead.
I'm going to do that. Yeah, okay.
Okay, I'll leave that to you, Raj.
Okay, please start. I can see that on the screen, but the rest of it is increasing. Please, whoever is on 510-282-9408, please say what you needed to say. You raise your hand.
Can you hear me?
Yeah.
Yes.
Okay, that was earlier, and I forgot to take it off.
Thank you.
I muted myself and found out I was already general. I would like to say one thing really quick about this same thing, and that is when people are giving instructions for the people on computers, that if somebody from the telephone side only doesn't speak up or clear up, in other words, the instructions aren't the same.
Okay,
Don't assume
for the phones, if you want to raise hands, I believe it's *9, right? Is that how you did, Rich?
Yes, but
Okay.
then I forgot to take it off after I'd spoken. So
that's fine, but people on the phone, if you want to raise your hands, please do *9. And I am going to mute everybody. I have two more hands. Raj, John Walsh and Norma wants to speak. So
I don't see them because my screen, the screen sharing is preventing me from seeing everybody.
Okay.
How do I get out of that?
This is John Walsh. I have a simple question. Can this be switched so that the speaker will be, whoever is speaking will appear on the screen?
When he starts
can
to
do that.
speak, yes, he will appear on the side, but he's sharing screen, so the screen will be like bigger. Yes.
You have
Let me
to
tell
switch
you,
your
let
own,
me,
you have to switch your own installation to
I don't
configuration to
I didn't
speaker
quite-
view. Click on speaker
Whoever
view.
is speaking will appear on the screen somewhere.
Speaker view. You have to click on speaker view. It says on Zoom, maybe at the top
Speaker view.
somewhere. Yeah, there should be a little icon that says.
There's a
speaker
gallery
view.
view and another
right.
view. Yeah.
I
Look,
think John was asking for the full face to see as the person was speaking,
Yeah,
and I don't know if we're
it-
going to get that.
Yeah,
if
we have to.
got
We
this.
actually have slides and things too, so you can see.
We got-
I think we should start.
What
not
I
have
wanted to
conversation
say
now.
about that was that you can look at the top. It says you are viewing Alan Miller's screen, and then it says view options, and you can shrink the size from of the viewing the screen to a smaller size. And
Yeah.
Right. Okay. Why don't we get started?
Let's
if
get
you
started.
if you
Norma,
can't,
please, let's get started.
you can.
Okay. Okay. Just a couple of quick things. I'll introduce myself. My name's Alan Miller. I've been working with the library for over 10 years, 12 or 13 years with the ICSS. And I teach statistics, statistical programming, and data science at UC Berkeley in the continuing education program in the extension program. And I have some background in economics. So a week ago, or not a week ago, on March 8th, I was following the business news and was absolutely astonished by the reporting that I was hearing. This was basically the night that the stock market crashed. And right away, I decided, well, I better jump into this and find out what's going on so I can do a presentation for the library. So this presentation is the product of that. It's been pretty challenging because there's so many changes taking place, and to kind of catch up and keep up with what's going on has been pretty challenging. So I'm going to try and give you a lot of information. This is not a full, perspective and analysis of what's going on, but a lot of ideas that we can have for discussion. Okay, so first of all, the COVID-19 pandemic has triggered the fastest and possibly, quite probably, the deepest economic crash in US history. Just to kind of give you a sense of how people are looking at this, this financial economist at Oxford Economics said, it's as if the economy as a whole has fallen into some sudden black hole. In fact, if you, this is a plot that came out the next day. This is already a little bit out of date, but it's really quite interesting. The red line in the upper left, what this plot shows is the number of trading days on the stock market since the peak to the crash, or the current crash at the time that this was done for the red line. And if you look at it, it's stacked up all of the stock market crashes starting from 1929 all the way out. And it shows that basically the stock market decline was so precipitous, was so fast and so deep in terms of the how many days it took to reach where it reached. It's actually faster than even 1929, where the stock market crash was actually dragged out for at least a few months. So this is a very deep and fast crash in the stock market. And that was the initial thing that was going on. This plot, this graph is really, really important. I want to just spend a minute or two on this to kind of give you a sense of what's going on. This is a plot from the BBC of US jobless claims. And when I first downloaded it, it was March 21st, and it showed that there were 3.3 million jobless claims that were filed. Well, by March 28th, it had risen to 6.65. And as of last week, it's actually now over 17 million people have filed for jobless claims. These are people who are out of work, filing for unemployment as a result of the crisis. This is just within the scope of a few weeks. Compare this. This is a plot of all the unemployment claims from 1970 to basically March 21st. You can see these little peaks on here in the shaded areas. These are past recessions. These are past recessions. And they sort of look like little bumps, right? Because if you get down here to the right side of the plot, you can see that in fact they've shot up. They're off the scale by a factor of almost 3. So the point here is that these are jobless claims. They don't reflect all the people who are unemployed, because a lot of people don't qualify for unemployment or are already unemployed. So this is really, it's more than the tip of the iceberg, but it doesn't represent everybody. And jobless claims are flying off, through the roof, basically. It's really unbelievable. Here's the height of jobless claims in the 2007 recession. And here it is up here as of last week. In fact, the number of job losses, just as measured by new jobless claims, is already greater than the 8.6 million jobs lost during the entire 2007 to 2009 Great Recession. So, folks, this is really unbelievable stuff that's going on right now. In addition to these jobless claims, there's a tremendous impact on small business and the economy. Small businesses in the US employ about half the private workforce, and about half of all small businesses have less than a month's worth of cash set aside. So what's going to really happen here is that we're going to have a real wave of small businesses shutting down, defaulting on their loans, and even entering bankruptcy. Hitting the small business sector is going to be a catastrophe that's going to be very hard to recover from. Let me just give you, just as a sense of what's going on here. This is a quote from Heidi Shierholz, who was the former chief U.S. economist at the U.S. Department of Labor. And this is what she wrote. I was so struck when I read this. She said, quote, "I don't usually look at data releases and just start shaking. This is a portrait of a disaster. It's like nothing we've ever seen before. It represents just incredible amounts of grief and suffering." In the mainstream press, which I've been reading quite a bit of in the business press, some mainstream economists are predicting a 24% decline in gross domestic product, GDP, and a 30% unemployment rate by the second quarter of 2020. This 24% decline is absolutely precipitous. It's unprecedented, really, in the history of modern capitalism. And basically, hang on to your hats, folks. This is something that we really haven't seen before. In fact, in just a few weeks already, the human social catastrophe has already begun. This is a quote from a New York Times article. "Never seen anything like this before." This is a food bank in Brooklyn, New York. The emergency food infrastructure is under tremendous strain as a result of the crisis. People are thrown out of work, sheltering in place in their houses, cut off from their paychecks, and struggling just to find enough to eat. This particular picture, I thought, was really incredible. This is an aerial shot of the road to the Greater Community Food Bank in Duquesne, Pennsylvania. And before food collection started at noon, and literally there was, the highway was backed up all the way out of the city of people trying to get to the food bank in order to receive an emergency basket of food. Absolutely unbelievable. A human social catastrophe. Now, let's talk a little bit about what's the official narrative, okay? On March 26th, right after the crisis hit, Federal Reserve Chairman Jerome Powell, who's also an investment banker, went on the Today Show to deliver a message to the American people. Quote, "There's nothing fundamentally wrong with our economy," unquote. One of the things to note is Powell, who again is an investment banker, his net worth is estimated somewhere between $20 and $55 million. And he actually is the wealthiest member of the Federal Reserve Board of Governors, multimillionaire investment banker in charge of the Federal Reserve, the central bank of the United States. Another part of this campaign initial narrative was from US Treasury Secretary Steve Mnuchin. Mnuchin and other Wall Street pundits are all over the cable news, that week, repeating the mantra, quote, "This is nothing like the last financial crisis." Just a bit of background on Mnuchin, in case you're not aware, he is the Treasury Secretary. He's the former 2016 Trump campaign finance chairman. He was a hedge fund executive, and he left Goldman Sachs in 2002 after 17 years of employment with an estimated 46 million of company stock and 12.6 million in compensation that he received in the months prior to his departure. So the two top government officials in charge of the economic management or response to the crisis are both investment bankers, hedge fund executives, multimillionaires. These are the people that are running things. If you want to understand what's actually going on today, what you really have to do is look back at let's talk a little bit about the 2020 financial crisis, like what actually has happened, okay? The current financial crisis actually has a very specific start date, September 17th, 2019. That's when the Fed, the Federal Reserve, for the first time since the financial crisis of 2007, 2009, began dumping hundreds of billions of dollars a week into Wall Street's trading houses. That program, called repo loans, which stands for repurchase agreement loans, now tallies up to more than $2 trillion in cumulative loans made to Wall Street at super cheap borrowing rates. Now let me just stop for a minute and give you a sense of what this repo loans program is all about. The repo loan program is basically a lending facility, quote unquote, by the Federal Reserve. And in many ways, it's a lot like a pawn shop for the banking system, for the financial system. It's the place where banks go usually when they have an overnight need for money, when they have a liquidity need. And in many ways, you can compare it to people like us. Let's say that you have some bills that are due, or you don't want to go default on your auto loan and you're short of cash. What do? You go to the pawn shop, you bring your family heirloom or your musical instrument, and you turn over your pawned item, and they give you some cash. But the idea is that very quickly you're going to go back to the pawn shop, pay back your loan, and retrieve your property. Well, this is basically what the repo loan program is at the Federal Reserve. Banks take treasury bonds that they own, turn them over, quote unquote, usually on an overnight basis, and then get charged a very small amount of interest in order to get this money that they can use to meet immediate needs for money, liquidity. The idea here is that it's sort of something that should be sort of a greasing the wheels, nothing unusual. And in fact, prior to September 17th, the volume of loans that were taking place on this exchange was something along the lines of $30 billion a day. Well, within a month, it had gone up to 75 billion, and then gone up over 100 billion, and in total since that time, it's now been about $2 trillion in loans that have been made by the Federal Reserve in this repo market. And this is a sign, this was perhaps the first sign that something serious was going on. So keep in mind that September 17th was 4 months before the first reported death from coronavirus in China. It was 5 months before the first reported death in the United States. Although denied by the Fed spokespeople, and ignored in the capitalist media, clearly there was serious stress and a liquidity crisis in the financial system before the coronavirus hit. And in addition to that, there was also news that many of you heard about, was that the collapse of oil prices from $75 to about $30 a barrel today, which also played a role in this crisis. And we'll get back to that a little bit later, talk about what's happening in the oil market. Basically, after that intervention by the Fed, the stock market declined by 21% in a few days after March 8th, and has been swinging up and down wildly ever since then. So the key point here is there were signs of stress, problems in the financial system before coronavirus hit. In order to understand what's actually taking place today, let's just briefly go back and look at the what happened in 2007 to 2009, because today's crisis really in the financial system really grew out of what happened in that period and what the government did in response. 2007 was the most serious downturn since the Great Depression. As I mentioned before, the total number of persons with jobs fell 8.6 million. Unemployment peaked at about 10%. I think it was around 2009, 2010. It took an unprecedented 5 years for total employment to regain the pre-recession level of 138 million in May of 2014. 5 years, a very slow recovery in terms of jobs coming back. Really, you kind of have to look and see what happened during that period. And keep in mind that the banking system almost collapsed in 2007, 2009, along with the rest of the real economy. In other words, not just the financial system, but actual production of goods and services in the economy. What happened in 2007 in the aftermath of the Great Recession was that this unleashed a 13-year spree of unbridled financial speculation. I want to just spend a little bit of time talking about this because I think people have a sense of it, but it's not something that people understand or is really, you know, forefront of their minds in terms of what's been going on over the last 12 or 13 years. The Federal Reserve response to the 2007-2009 Great Recession was to implement a policy of quantitative easing. And QE, as it was called, is really just a fancy name to disguise its real purpose, which was to buy bad and even worthless assets from financial institutions in order to rescue those institutions and to prop up the collapsing asset markets that these banks whose assets they held. And this is a little bit hard to read, but I just want to show you, this is a very significant plot. This is a plot of the Federal Reserve's balance sheet from 2007 to 2020. And basically what this shows is all of the assets that the Fed bought from banks. And by assets, we mean things like loans, mortgage-based securities, things like that. These were loans that were on the books of banks, assets of banks. The Federal Reserve basically took these over, purchased them from banks and other financial institutions. And they ended up on the Federal Reserve's balance sheet as assets of the Fed. And if you look at it, between 2000, there were 3 rounds of quantitative easing. And actually, I think these dates are off. Between 2010, I believe, and 2014, $4 trillion in assets were purchased by the Fed. If you look at this red shaded area on the plot, this represents the years of the Great Recession. You can see that the Fed balance sheet shot up, right? And this had a lot to do with purchasing banks' assets. Also, the TARP program, the buyout relief program that the Fed implemented. The Fed's balance sheet really swelled up during that period very quickly. But you'll also notice that the balance sheet assets for the Fed also rose steadily up to about 2014. And in fact, if you look at it, my years were right. Between 2014 and about 2018, about $4.25 trillion worth of assets were kept on the books of the Federal Reserve. Federal Reserve was going out and just pumping money into banks, buying up bad loans, smelly assets, basically buying the junk from banks and other financial institutions and holding it on their own balance sheet. This went down a little bit. They started to sort of take this down as they felt that the crisis had eased. But in fact, what happened starting just in the latter part of 2019, just since this crisis took hold, that the Federal Reserve assets have shot up to over $5.25 trillion from this low of just below 4 trillion in the past few months. So the Fed has jumped back in with a massive increase, hundreds of billions of dollars, up to $5.25 trillion now of assets that they own as a result of this crisis, as a short-term response to the crisis. One thing to keep in mind is that the financial system this time did not crash. So this was really a preemptive program in this case. Another thing that the Fed did was it implemented a policy of zero interest rates monetary policy. And basically what the bank did was that it offered loans at interest rates of about 1% or less to even some of the banks that were teetering or outright insolvent. So there's been an era of 10 years of very low interest rate loans available from the Fed to banks, 1% down to zero, and basically just an unregulated source of credit, an unlimited source of credit for banks and other financial institutions. Banks, private equity firms, firms that buy the assets of other companies, and corporations, through stock buybacks for the corporations, funneled hundreds of billions of dollars into the stock market, fueling a stock bubble, driving up stock prices over a 10-year period that just came to an end. And take a look at this plot. I think this is also very revealing. This is the S&P 500. It could be the Dow Jones Industrial Average, just an index that shows the level of the stock market. And you can see the declines that took place in the crashes, right? This is the crash of 07, 09. This is the beginning of the crash in March. But the stock market started off, the S&P started off below 1,000 and basically quadrupled, almost quadrupled over a period of 10 years. This started with Obama, under the Obama administration, and continued with Trump. It's been just an onward and upward rise in stock prices, 20% last year before it hit its peak in February before the crash. And this is something that is just absolutely unprecedented. And it's been a source of tremendous wealth generation for the upper, very small percentage of the population who owns the majority of stocks. So this bubble has been growing since 2008, and now it has popped. The Fed has been just spewing generosity on Wall Street. The banks, at the same time that the banks were charging struggling households with double-digit interest rates on credit cards, and foreclosed millions of homes, leaving entire neighborhoods blighted. As a result, one of the things that's happened as a result is that the US has the worst income and wealth inequality since the late 1920s. And I put these pictures in here because I want to really emphasize something to people. These are all pictures of Fed chiefs and Treasury secretaries, starting with Bush and going through Trump. And I know that there's a lot of, I mean, Trump is our president. This has been going on for a year, and he's been, you know, blowing his bombast about the economy now for the past year. But this has been going on ever since the Bush administration with Hank Paulson, the Obama administration with Bernanke and Geithner, and now it's Steven Mnuchin. These are all people that come from the banking industry. These are all billionaires. These are all finance capitalists. These people represent the richest, most powerful, parasitic financial speculators in US society. These are the people who have been running the government's programs for managing the economy and intervening in response to the crashes. And I would call special attention to Obama, where if you look at this, the majority of this stock run-up really took place under the Obama administration, where he basically allowed Bernanke to stay on as the Fed chairman, brought in all the people who were responsible for the financial deregulation, and engineered this massive blow up of stock prices that benefited the wealthiest segments of American society. This is really Obama's legacy. Now, there are criticisms of the official narrative that everything is okay. And I just wanted to call your attention to one that I recently saw that I thought was very observant. Peter Schiff, who is a right-wing, he's the CEO of Global Capital, you know, Euro-Pacific Capital or something like that. He's kind of a gold bug and a very conservative economist. He made a statement: people are too focused on the pin and not on the bubble. And really what he's saying here is that too many people are focused on the pin and ignoring the bubble that the pin pricked. You know, before the COVID-19 shutdown, the economy was long overdue for a severe recession, and the US stock market was long overdue for a bear market. So I think the COVID virus simply accelerated the onset of both. I think we still have a long way to go on the downside, and the economy, the real economy, I think is going to be even worse. Very, very observant of him to make that point that everybody is sort of looking at the COVID virus, which is really the pin, but the bubble is this financial bubble that was created by the government and the large banks and financial institutions over 12 or 13 years. That's something that sort of attention has been drawn away from. But I would add, and what I want to talk about for a few minutes, is the fact that the bubble itself sits on something even more fundamental, which is the global capitalist economy. So let's talk about that. Peter Schiff and many right-wing economists, they have insight in the sense that they know that this bubble cannot go on forever. But their solution, and this is important for us to keep in mind, is for fiscal austerity. Austerity is going to be the watchword of the day moving forward here, and it's going to be embraced by both the Republicans and the Democrats. It's going to be a bipartisan call, and it's going to be something that's going to be very dangerous and very destructive for the rest of us in the working class. So let's talk about this. Again, the official narrative is that the economy was healthy and that the virus caused the collapse. In other words, the virus, a part of nature, is completely external factor. It's a completely external factor. This is what caused the collapse. It had nothing to do with the economy. And in fact, Trump was bragging about the beautiful economy and as late as December last year and how wonderful everything was. There were monthly reports of job growth, and the stock market was going up, up, up. Went up, I think, at a high point, almost 30% last year, which is absolutely insane. So basically, the key point here is the official narrative is that this is an external event, that the virus caused the crash. Now, we've already seen that this isn't entirely true, that there were serious signs of trouble in the financial system before the coronavirus hit. The virus, like the pin that popped the bubble discussed earlier, was the immediate cause of the collapse. But is it all that there is to it, as depicted most commonly in the official narrative? There's a completely different narrative that focuses more on the fundamental problems in the underlying capitalist economy, and I want to go into that a little bit. I want to use an analogy here, a couple of analogies, and I really would like people to think about this and comment on it later on. The virus hit the economy like a powerful storm that hits a house that has very significant structural problems. In a situation like that, the house would suffer tremendous damage, possibly even collapse, and repairing it after the storm would pose significant challenges. Perhaps a house like that would not be repairable. It would have to be torn down and a completely new type of structure built in its place. A stronger structure built on a more solid foundation and a more natural foundation. And that's really what I want to talk a little bit about. Another analogy that comes to mind is more like the medical and public health crisis that we're currently experiencing. When the virus hit, the global capitalist economy in 2020 was like a patient with a weakened, severely compromised immune system. The result is extremely serious and possibly even fatal. When the coronavirus hit, the global capitalist economy was already weakening. It was experiencing serious long-term structural problems and was long overdue for a recession. Real annual US GDP growth in the fourth quarter of last year had fallen to under 2%, and many economists were forecasting further slowing later this year. Other major capitalist economies were in or near recession. Parts of the Eurozone, Argentina, Mexico, Brazil were all experiencing slumps before the virus hit. China, the fastest growing economy, was slowing. Japan had already slipped into a recession, and several countries in the EU were close to, if not already experiencing, negative growth. Business investment was stagnating. There were problems with declining productivity. Non-financial corporate profits had been on a downward trend for 5 years. Manufacturing sector was already in a recession, and the volume of world trade was slowing. Now, these are all stories in the business and economic press that were being talked about prior to anybody even hearing about COVID-19 on the scene. There was a lot of concern, a lot of angst in the business press, the capitalist business press, about these things going on. Books were being written, papers were being delivered at the American Economics Association meetings on stagnation and what to do about it. All of this really was happening before the virus hit. In a sense, the economy was already at a tipping point, if not already falling. When the coronavirus hit, the economy fell hard. Keep in mind that there have already been 2 major recessions in the first 20 years of the 21st century, in 2000 and 2008. This will be the 3rd one in the first 20 years of this century. As we said before, 2007, 2009 was the worst since the Great Depression. And following on to it was a bank bailout and the growth of this massive financial bubble on top of 10 years of very, very slow recovery, but by historical standards. For the working class in this country, there's been a precipitous declining job quality. Many of the jobs that were created since the last crash have been low wage, precarious jobs, involuntary part-time employment, gig employment jobs, not robust return of jobs that were here in the past, but actually much lower quality jobs, part-time jobs in many cases. There's been this massive increase in outsourcing, jobs being shipped overseas to China, Mexico, Indonesia, the quote unquote global South. And this has been going on since the 1980s. It's not just something that in recent period, but it's sort of a more long-term structural change in the economy. The Rust Belt in the U.S. has been, we're all aware of that. Major industries, rubber, tire industry, automobile industry, etc., were gutted in the periods after the late 1970s and 1980s. Automation has led to tremendous job losses. Many far less workers are producing the manufacturing output today that's domestically produced than they were 10 or 20 years ago. There's been a long-term wage suppression. Actually, real wages in this country have not appreciably risen since the early 1970s. So real wages on the part of workers, wages that are adjusted for inflation, have actually been fixed, if not declining, for the past almost 50 years. And coming out of this situation, which many people describe as the era of neoliberal capitalism, as the Federal Reserve said in a study last year, 40% of Americans don't have $400 in the bank for emergency expenses. So the picture that you get of the US working class prior to the coronavirus collapse is that of precarity, difficulty, instability, lots and lots of problems that were here before the virus hit. Really, what the crisis, the pandemic is, it's a revelatory event. The pandemic has exposed critical weaknesses in the capitalist public health infrastructure. I think we've all been following these stories about the lack of personal protective equipment, shortages of ventilators, medications, hospital beds. The U.S. economy has been unable to supply these necessary items that are needed for dealing with the crisis at a public health level, because all this production has been moved overseas to areas of low-wage labor, leaving us high and dry, and with these very long, drawn-out, undependable supply chains for necessary items for public health. We also have a healthcare system that is the most expensive in the world, with huge deductibles. We have a dysfunctional private payment system based on at the core of which are the private health insurers and big pharmaceutical companies that have been gorging in the last 10 or 12 years on billions of dollars in government subsidies. And we also have millions of uninsured and uninsured workers. Prior to the crash, I think there were something like 60 million uninsured workers, another 20 million thrown off, off their jobs, are going to be losing their insurance. So we have this massive amount of uninsured workers at the time of a public health crisis, which is really unimaginable. It's really incredible. It really shows the utter failure of the capitalist system to provide for people's basic healthcare needs. And this is a revelatory event. In response to the crisis, we have another capitalist bailout and stimulus. And I want to talk a little bit about that. The Fed is implementing a new lending facility that amounts to a broad-ranging preemptive finance capital rescue program. Basically, what's happening here is that the Federal Reserve has turned into the bad debt garbage can of the U.S. capitalist economy. In response to the crisis, the Fed has announced that it will provide unlimited credit and assume the bad debts of virtually any capitalist financial enterprises. So such enterprises that have bad debt can now dump it on the Fed. What do I mean by that? The Fed will come along and buy it from them at inflated prices, right? In many cases, worthless assets like auto loans that are defaulted, etc. So it means that these lenders can dump their bad, deflated, or otherwise non-performing loans from credit cards, auto loans, student or small business loans onto the Fed. And the Fed will eat them, adding to the Fed's own 5 trillion plus indebted balance sheet. Remember I showed you that plot before, showed up to $5.25 trillion currently on the Fed balance sheet. It's going to rise to $8 trillion and more. And this down here is a little cartoon which shows the big banks, hedge funds, private equity firms, insurance companies, all manner of financial institutions and shadow, what are called shadow banks and the shadow banking system, bringing their debt garbage and dumping it onto the Federal Reserve balance sheet, into the Federal Reserve. Let's talk a little bit about the bailout itself, the Capitalist CARES Act. Congress just this past week passed, and Trump has signed into law, the CARES Act. I like to call it the Who Cares Act, versions 1 and 2, with version 3, probably 4 and so on coming soon, which is essentially a true $2 trillion coronavirus aid package. And let me just talk a little bit about this. I could do a whole hour presentation or another separate presentation on it, but I just want to kind of give you the highlights. Basically, this CARES Act package consists of about $500 or $600 billion in aid to large corporations, medium corporations, and small businesses in the form of loans and grants. They're going to extend loans to these corporations. If the loans are used to maintain payroll, in many cases, they will be converted into outright grants. So basically, the government is giving money to companies and telling them, look, if you use this to maintain your payroll, to keep people on payroll, we'll just forget about your debt obligation, forget about the loan, and let it go. And of course, this means that, you know, big corporations, they can sort of fiddle with the books and arrange to charge off all of these losses to the federal government. And who knows how that's actually going to, whether or not it's going to trickle down to the people on the bottom. Included in these large grants is about $60 billion in aid to the airline industry, including Boeing Corporation. And I just want to call your attention to that because the airline industry, Boeing Corporation, in the last few years, actually handed out the equivalent of almost that amount in stock buybacks of their own company stock and dividends and bonuses to their executives who are also shareholders in most cases. So a lot of these big companies, they're actually sitting on a fair amount of cash. They've been able to borrow money at these very low interest rates. Much of that money, as I said before, was going into the stock market anyway. Many of the large corporations, they're not really that strapped right now. And this is a huge giveaway, especially for the airline industry. For small businesses, it's about $377 billion, almost $400 billion. And again, these are loans and grants that are designed to support payroll. Keep in mind that, again, what I had said earlier, about half of small businesses really only have about 1 month's worth of cash to stay afloat. So we're going to see, this is something that's going to be very difficult for them to use to survive, basically. In addition to that, the government is going to put about over $300 billion into the municipal bond market. This is the market where states and local governments have floated bonds to finance usually long-term, well, it's supposed to be capital projects like roads and things like that, but it's actually now become something that's been sort of an operational source of revenue for operating local governments. $300 billion. And the bond market is collapsing. The Fed is going to step in, basically buy many of these bonds and try to prop up that market, that asset market for local and state governments. The part of the bill that I really want to focus on for a moment, and I'm almost done, is the payments to individuals. And I think we're all aware of the fact that basically what's in the CARES Act so far, at least, is $1,200 per person for households with an upper limit of income, somewhere just over $100,000 for a two-person household, and $600 one-time payment for child dependents. In addition to that, we have $600 of federally augmented unemployment insurance for about 4 months. So for the working people, and in this case, this does include an expansion of unemployment to gig workers and aid to others. This is basically a $1,200 payment with $600 per child and some augmentation, 4 months of unemployment benefits, a very small amount. If you think about how expensive it is to rent, to pay for food, to get medical help, etc., this is basically nothing in comparison to hundreds and hundreds of billions of dollars being handed out to business. This rescue package is a neoliberal rescue package. It's an approach to government that puts aiding large capitalist enterprises at the center, saving them, maintaining them, sustaining them at the forefront of its strategy, its strategic approach, and really giving very small amount to a pittance to the 160 million working people in this country and small business owners, which are even more, total, to get through this crisis, which is unprecedented in American history. So basically, we have 6 to 8 weeks of support for workers. We have mainstream economists and people in the government saying this will be a quick recovery. It's a V-shaped recovery. It's going to be a massive collapse followed by a very quick recovery. There's also a big push, this meme that is being pushed out, especially by people on the right, that the coronavirus cure is worse than the disease. There's a push to restart the economy. What this is really pushing to is a failure to contain the pandemic and to return people to work, which is going to lead to a disaster. It's going to lead to a disaster. Who knows how long this thing is going to go on for before, if ever, things are going to return to the way that they were before. This is going to cause catastrophic suffering for working people, and also is a real game changer in terms of a revelatory exposure of the capitalist system. So let me just spend just a minute, and I'll be done, talking a little bit about that. Really what we had prior to the coronavirus was a fundamental, a systemic crisis of the global capitalist system. Something was going on there. We all know that. It was very bad. It was headed towards disaster. The COVID virus has accelerated it. And just like a storm that hits a house and reveals the weaknesses in its structure, the coronavirus is revealing to everybody, and especially working people in this country, how corrupt, how feckless, how irresponsible and ineffective and greedy the capitalist economic and political leadership is in this country. They aren't dealing with it. They can't deal with it. In their minds, oh, we're just going to throw a little bit of money. We're going to crank up the quote unquote printing prices at the Fed and toss out some $1,200 checks to workers, and things will be back to normal, and the financial bubble will continue inflating, and we're going to be right back where we were. And this is all nonsense. The damage to the economy, I mean, if you're hit by a car and you're hospitalized and near death, you're not going to pop right back up. Nobody can predict what the shape of this recovery is going to be, whether it's going to be a V, a U, an L, or just an arrow going down. But we do know that these structural problems have been around for a very long time, that recessions are not new, that they're inevitable under capitalism, and that crises are inevitable under capitalism, and that this is a revelatory event in the sense that it's revealing all of these underlying problems in the capitalist system that are going to cause tremendous shifts in the political and economic structure of this country. In order for, the capitalist sector in this country is in no shape to lead an economic recovery that's going to lead back to full employment and rising real incomes. It wasn't before the crisis hit. And really what would be required on the part of the capitalists would be a massive government intervention to succeed. Something even greater than the scale of the New Deal programs that were designed but actually didn't pull us out of the Great Depression. And these sort of programs are unacceptable to capital, unacceptable to capitalism. We're not going to see them. And we can see it already in these meager, paltry, laughable measures that they've taken so far. So I'm running out of time. Can't predict the outcome, the specific outcome, but undoubtedly it's going to sharpen the contradictions and it's going to increase the struggle. And I think it's very important for us on the left, socialists, revolutionary socialists, and communists, to really explain to working people, the majority of people in this country, what's going on, the lessons of what's taking place, that the neoliberal policies that the government is implementing as a cure to the crisis, and even some of the forms of quote unquote socialism that have been proposed, say by people in the Democratic Party, are nowhere near enough to address the problems that we're facing today. And hang on to your hats, folks. This is going to be quite a period that we're going to be going into. And that's it for now.
Thank you, Alan.
Yeah.
So I see Sharon Rose has raised his hand, and there will be others asking. But before we go that, Gene, with your permission, shall we take a 5-minute break so people can use restroom just like we did in the library, or whatever they want to do, and then reassemble? And Gene, you have some announcements to make, and then we'll go into question and answer. So in about 5-7 minutes, Gene, can you please tell me if that's okay? And at this point, I will also suggest not share the screen so I can see everybody's picture all at once, because people will be raising hands. So is that okay, Alan, if we not share the screen at the moment?
Alan, you have to unshare the screen.
Okay, so it is done individually.
Okay.
That's your thing. Unshare the screen individually. Okay, I got it. Okay, this was okay. Gene, you want to go next?
Okay, I do seem to be unmuted. I don't think we need to take a break. If people need to do stuff, they can just walk away and miss my very exciting announcements. Okay, I'll just go ahead and proceed, making a few announcements. First of all, on finances, obviously we're not going to pass the hat. And after Alan's excellent talk, I guess the library is in better shape than the global economy, which is not saying too much. But we do have a treasurer now, or somebody who we volunteered to become treasurer. And we will start figuring out ways that we can receive money from people. We're still working on that, so keep the money in your little piggy banks, but we will be asking for it later on. And again, we had some pretty exciting talks. I mean, Alan's talk was really good and really thought-provoking, and I'm sure there'll be lots of discussion on that. But I want to let you know what's coming up here. Next week, April 19th, we will be our ICSS members, Raj Sahai and Mehmet Bayan. Iran. Well, if that may have when Mehmet and Raj will be discussing the global pandemic using India and Turkey as case studies, and we will have a blurb from them very soon, and that'll be sent out as usual on Friday. Then following that, on April 26th, our comrade Sharat Lin will speak on COVID-19 pandemic, apocalypse or opportunity. And let me just read you his blurb. The COVID-19 crisis has, in a matter of weeks, spread to nearly every corner of the planet, disrupting every human activity. What is different about COVID-19 from other diseases? Suddenly, everything is being reprioritized. Universal health care, paid sick leave, drug companies, sharing data on vaccines and treatments, housing of the unhoused, reducing the number of prisoners, restructured food chains, reducing meat consumption, multi-trillion-dollar rescue packages, war ceasefires, lifting sanctions are the new existential priorities. Meanwhile, fossil fuel consumption, traffic jams, and air pollution have plummeted, producing a possible respite in global warming, the other's existential threat. This is a global shock solely of the human species. Is it an opportunity to reset priorities for humanity? So that's a very important question we need to address. And then the following week, I'm thinking of doing something, and I hope people may want to be included in this, is namely on the Bernie Sanders campaign and what's going on politically, because I don't accept the premises that all Democrats, well, I don't really consider Bernie a Democrat. And, but anyway, it is keep the burners burning, but I will work on that more. So that's some of the things we have coming up. I don't know if we want to hear from our financial new treasurer, if he has anything to say, or we should proceed. But that's all I have to say for right now.
He says no. I'm going to mute him. You have something to say, Richard?
Nothing right now.
Okay, fine. So I will leave him, Richard. Okay, so Sharon is the first one to raise hands. So Sharon, please go right after I unmute you, which I think I have done. On my side, hasn't happened. Okay, why it is not happening? Oh, lower the hand.
Oh, okay, I got it.
Okay, okay.
Thank you. Alan, thank you very, very much. This is great. I hope that we can get your slides in addition to seeing you on YouTube. I have three very short comments. One is that I believe that the minimum we can get out of this, the working class of the United States will get out of this, is Medicare for all. I think that it's inevitable that we're going to get that. Not without struggle, of course. But it's interesting to watch what's going on in the UK, and when the acting prime minister gets up there, he has some slogans underneath his podium, and one of them is "Protect NHS." So even though Britain is being run by very conservatives who have botched this whole thing as much as Trump has, apparently, they still are protecting NHS. On the question of the bailout of big corporations, which is a huge part of this CARES thing that was passed, someone sent me a link to the website of something called The Young Turks, which is some kind of progressive, they claim they're a progressive group, and I've never heard of it before, but I watched one interview they did with an economist who they said was a capitalist economist, but who was saying that none of the big corporations should be part of this bailout, that they need to sink or swim, because it's really just bailing out their shareholders, the hedge funds and the big banks, the Wall Street banks. For example, the airlines have a lot of assets. Those planes have not suffered from the virus. And they also are sitting on huge amounts of cash. So why are we bailing them out? It's only their shareholders we're bailing out. So that was an interesting argument. And I can send you the link to that if you'd like to see it. And finally, Alan, you didn't mention how they're planning to get all this money that they're giving out under the CARES and other bailouts that they're going to be passing. And I think that in addition to the role of the Federal Reserve, they're going to increase the national debt. I think I'm correct about that. And so a large part, a significant part of the national debt is owned by China, the Chinese National Fund. And I've always thought that what that represents is the Chinese working class propping up the American way of life, our economy as a whole, including how certain parts, at least a part of the US working class has benefits under our economy. And I've always wondered how long the Chinese are going to go on doing that. And given that this crisis affects everyone around the world, I imagine that they're worrying about who's going to buy all that new US debt.
Sharon, your time is up. I'm not particularly, but please, everybody keep it to 2 minutes. Alan, you want to respond to that first before we go to the next?
Let me just make a quick response, a couple of things. First of all, regarding the infrastructure part, see, I think that the key point I want to try to make here is that there's a lot of left liberal criticism, within the framework of sort of a humane capitalist system about the CARES Act, the unfairness of it. But I think that the thing that we really need to be focusing on is what the capitalist class is doing, the finance capitalists are doing in response to the crisis, and how it's fundamentally incompatible with the reality of what's taking place in terms of what they're giving people, but also, as Sharon mentioned, how they're getting it to people. This thing has really exposed the fundamental weakness in the infrastructure. The unemployment system is crashing because it can't handle it. They can't organize the economy. They can't organize food to people. They can't organize necessary public health measures. They can't get unemployment checks. And even those $1,200 checks, they're not going to be able to get them out to people because the capitalist system is an uncontrollable, well, I don't need to go into it, right? But that's the first thing on that. In terms of the connection, in terms of the debt, I think that that's a very important part that I left out that I really need to get more into. This whole situation really rests on the willingness of other countries to continue to purchase treasuries from the United States Treasury. And I think that this is probably, even though it wasn't in my presentation, the most important problem right now that's being faced in the international capitalist financial system. And this system is under such strain, it's unbelievable. At some point, and we can already see signs of it, cracks are going to develop. And once the system goes down, really, what's the difference between the US and Greece? The Greek couldn't float treasury bonds internationally to bring in foreign exchange to be able to go out and buy things, right? So this is, I think what Sharon was touching on is something that's of tremendous importance.
One clarifying before I go to the next person on the same Sharon's question is, when Federal Reserve does quantitative easing, does that add to national debt? That's my question before we go to the next person.
It adds to the balance sheet directly of the Federal Reserve, and it does it does add to the national debt in the sense that when the government issues treasuries, which are basically IOUs, the Treasury issues treasuries that are treasury bills, treasury bonds, treasuries. Those are added to the national debt. So yes, the national debt, it's $1.5 trillion right now and growing. It's going to be, it's going to really lead to an explosion.
Okay, I'm going to go to the person who's on phone, raise his hand, then I'll follow up with the other 3 people who have raised their hands. Okay, so please go ahead with the phone number that ends with 9120.
Yeah, thank you, Raj. This is Roger Harris, and thank you, Alan, for an excellent presentation. Just a few comments and a question. I really liked a lot of your analogies, and the analogy that I especially liked was the analogy of, or the comparison that you made between credit card debt that the working class holds, which is double-digit debt.
Can you speak up? Your volume is low.
Is that better?
Yeah, your mouth needs to be closer to your mouthpiece.
Is that better?
Yeah, that's a lot better. Thank you.
Okay. Excuse me for having a technical issue. Of the many comparisons that you made, Alan, I thought one that really hit home was the fact that credit card debt, which the working class holds, is double-digit debt. At the same time, the ruling class, the banksters, are getting gifted money, basically interest-free money to make profits. So that really hit home. Sharon, I agree with you about Medicare, that it's becoming more and more evident that single-payer Medicare for all is the way to go. I think that that's becoming very, very clear, even clearer than it was before the pandemic. But whether it's inevitable, that is a very difficult question, because Medicare for all actually would help the capitalists in a short-term way because it would reduce their labor costs. So they should be for it. But the capitalist class is class conscious, and they understand that if there was universal health care, the working class would be less precarious. So from a class point of view, they are opposed to Medicare for all because it would make the working class stronger. So that just a comment. Alan, one question is that a number of times in your presentation, you mentioned that the recession was long overdue. And I think a lot of economists, both left, right, and center, all would agree with that position, but they all had different reasons for thinking that the recession was long overdue. So perhaps you could elaborate why you understood the recession as something that was long overdue. Over. Thank you.
Thank you, Roger. Your time's up. So Alan, you want to respond to that before I go to the next person?
Yeah, very briefly, in terms of the recession being overdue, I'm just going to leave it at a very general level that, we've been having cycles in capitalism since the early 1800s. And this expansion was actually the longest, I believe, in US history in terms of the official measure of number of quarters of positive GDP growth or the lack of negative GDP growth. So, the dip in 2007, 2009 was the deepest since the Great Depression. The expansion was the longest. It was also one of the slowest, if not the slowest at points. And it was the kind of thing that everybody sort of knows. I mean, a lot of mainstream economists are sort of, and financial people are sort of caught up in this idea that, hey, we're never going to have another recession. But just on the basis of standard time cycle comparisons, it was bound to happen, and it was just about to happen really when it hit. It was already happening in many ways.
Okay, so I'm going to go, and please stick to 2 minutes. I will warn you a few seconds because we have a lot of participants. So next one is Dave Walsh, that will be followed by John Walsh, and then Gene. So Dave, go ahead. I'm going to lower your hand and unmute you. Yeah, you can proceed now.
It says you cannot unmute yourself. That's all right.
I have unmuted you.
All right. I have a question about the consequences of all this money printing that has been going on for a long time, but in recent years, at an exponential rate. The amount of loans and in circulation has just been increasing enormously. And do you think this is going to lead to hyperinflation of some sort? I mean, it seems to me just logical. There has to be a consequence of this. If you have all this money chasing a limited number of goods and services, then it seems to me that there has to be inflation. But what do you think about that?
Thank you.
Very important question. You know, it's interesting, but as Marxists, we believe that, or we know that the the driving force of the economy is profit making, capital accumulation, and that's the engine that drives the economy. Now, many mainstream liberal economists frame this thing in terms of supply and demand, aggregate supply and demand. There's trying to think of the best way to answer your question. There's a school of thought called modern monetary theory, which says basically deficits don't matter, and that all we have to do is have the government print money, and this will spur demand, which will call forth production. Okay, so it's a very Keynesian model. It's kind of a left model that really underlies the progressive Democrat approach to economics. On the right-hand side are the gold bugs, the anti-austerity, mostly right-wing conservative economists who think that the economy, that the government really can't do anything to spur production, and that all of this pumping of money into the economy is going to have an inflationary effect. So these are the two extremes in terms of within the framework of capitalist thinking about how the economy works. In my view, I think you're onto something, okay? I disagree with both sides in this case. The point is that with all of this tremendous amount of money that's getting flooded into the banking system, the financial system, into the economy, the key question here is what is it that, what is it that is going to spur the production of goods and services that this money is going to be used to purchase? And just because you put the money out there doesn't mean that it's going to call forth extra production, as people on the modern monetary left would say. So I think that there is a danger of inflation, and a lot of it really depends on this process that Sharon was referring to in the first question, is whether or not countries are going to be continuing to be willing to buy these treasury bonds to give us foreign exchange for us to be able to go out and buy many of these goods and services that are purchased internationally. And I think that there are problems with that in the long run. Right now, it's not something that's immediately collapsing. In fact, in times of crisis, foreign countries' capital flows into buying treasuries. It's sort of a safe haven. But ultimately, I do think that it is a problem, and I can see inflation down the line, especially in this upcoming situation where the economy is basically clamped down on the supply side. Production is stopped by the lockdown, and you're giving people some money to go out and buy things. You're not really increasing the supply, but we're in kind of a deflationary period too. So that's the other side of it. This is something I think warrants a really longer discussion. Right now, I would say that the main thing is that the economy is in free fall. We're experiencing a tremendous deflation. I think down the line, we could see a return to stagflation, and it's something that we should talk about. It's a very important point.
So John Walsh is next. Thank you, Alan. I have unmuted him, or at least I have tried to unmute him. But John, have you muted yourself? My thing is not working. Looks like you have to unmute yourself. Okay.
I muted myself. Okay, thank you. I like to talk a great deal. I thought it was very interesting. I guess I also was interested in the question of inflation, but I have, I guess, a comment to make on the dragon in the room, China, which already came up once. And with the pandemic, it's very clear, and it doesn't take much to see that China has performed magnificently and made a real historic contribution in handling this so well. It's also clear that as soon as the United States death count and case count began to make the United States look very bad in comparison to China, all of a sudden people are saying, led as usual by the New York Times, you can't believe the Chinese data. That wasn't there before. Now it's all over the place. And along with that, China has been whited out or airbrushed out of a lot of coverage. In the New York Times, they have this daily tracker for all the countries and states. And China was always there until about 4 days ago, with a magnificent performance compared to everybody else. Gone. They don't show it. One country has been whited out. So I think the United States is very concerned about its image in the world and how it's being compared to China. China's also now coming out of its recession apparently very quickly. The auto industry is back to normal. It's only a question of whether it can drag the rest of the world with it. So now we have the United States will be compared to China in the economic response. I think the US ruling class is in a panic over this, and they're trying to undermine China's achievements in every way.
You have 15 seconds.
Yeah, that's just a comment.
Thank you. So Alan, shall we go to the next question since that was a comment?
Sure.
You want to
Sure.
say something? Okay. Jean is next. And Jean, please go ahead. I've unmuted you.
You're muted, Gene. You're muted.
Oh, Jean?
Turn on your microphone.
Yeah,
There
you're on.
You are unmuted by host. Thank you. Well, thank you very much. This was again, a very important and good discussion. And it reminds me back in the 2008-9 crisis, we had a little crisis study group. We put out 3 publications on various aspects of the crisis about the falling rate of profit and so forth. And I think you contributed to that, didn't you, Helen? Yeah, so I urge everybody to go back to the website and reread some of these things, which are still relevant today. And I like John's comment on China, because I think we have to remember that there is the capitalist system that moves in certain directions that are spelled out in capital, and we need to understand that. But capitalism, it also is manifest differently in different settings, because I think China has it under control much more than any other nation. And we can look at, for example, European countries, by and large, I think there's what some people call capitalism with a human face. They put in very good medical care systems, single payer, unemployment insurance. So I don't think they're hurting quite as dramatically as we are here in the United States. Just driving down Adeline Street behind my house, there's the homeless camps all over Oakland, as we know. And I'll just remind you one last point. My contribution to the essays, the Marxist essays on from the ICSS crisis group, my contribution, everybody's complaining about, oh, these
15 seconds, please wrap it up.
are too big to fail. My comment was, let them fail. Then we can take them over.
Thank you. Alan, you want to respond to that or just proceed?
Yeah, I just want to make a very short response to John and Jean. I think that what John was talking about is definitely true, that from what I can see, really this is such a sign of the decline of the United States and the decrepitness of finance capital in the United States, the parasitic nature, the corruption, the ineffectiveness in the way that they're handling this crisis. I don't think it's a question of capitalism versus socialism. I think you look at countries like South Korea, Singapore, Taiwan, China. Clearly, there's something even particularly rotten about what's going on here in the United States in the way that we've dealt with the crisis and their inability to respond to it. So, yeah, I think it's really a sign of decline, and that's a whole other piece.
Okay, next person I'm going to is Norma. I have lowered your hand and I'm going to unmute you. Norma, please go. You have 2 minutes.
Hi. I've written a bunch of comments on the chat. There is supposed to be a way that people can access it if you care to. One of the comments I have is that our production, we've been in a fragile condition ever since the existence of the social relations that we live in have been in place, and that is workers are not allowed to produce what we need and want. We do not produce sustainable living situations that are about taking care of us, about us taking care of us. We are producing for profit for our owners. And this relationship has been allowed to go on because some people have been getting what's called good jobs, which are definitely not anywhere near as secure and comfortable as, say, our owners are living today. The relationship of us as workers, that is the dehumanized condition, worker as opposed to being human, serves these destructive structures. We produce cars instead of living situations where we don't have all that transporting to do in order to get to work, in order to get our groceries, so forth and so on, that they should be much more in range of being close to us and integral to the structure of the places where we live. There's all kinds of design possibility that is definitely not examined because it could be for our own benefit instead of for our owners that use our labor.
Thank you, Norma. Thank you, Norma. So I think, Ellen, do you need to respond to that, or shall we go to the next question?
We can go to the next question. At one point, I would like to make a comment about something that I didn't mention, but go ahead. Let's go to the next question.
Michael Kaufman is our next person to ask a question. I'm going to unmute him. Sorry, that was Eric Montague, but it was Michael Kaufman, and I lost him. There he is. Okay, Michael Kaufman lowered his hand, and now, Michael, you should be able to speak if you unmute your own microphone.
Thank you. This is actually Susan.
Okay, sorry, Susan.
Okay, Alan, please talk about oil.
Michael Kaufman, I apologize.
I'm
an
imposter. Yeah, thank you, Alan. Please talk about oil.
Yeah, just a quick point on that. Some of you may recall that in the days before, a few days before the collapse in the stock market, there was a collapse in oil prices, and it's kind of an ongoing crisis. Like the stock market, the oil price has kind of gone up and down, mostly down in the recent period. One of the big problems in the oil market is the fracking industry, the shale oil industry here in the US. And in fact, if you look at that, a large component of the US oil industry, I don't know the exact percentage right now, whether it's a majority, but it's a very large share, is this new fracking technology, oil extraction, shale oil extraction technology that's really came into the fore in the last 10 or so years, 10 or 15 years. This entire project was financed on the basis of corporate bonds that were issued by the oil companies. And the industry itself has really never been able to, it's just not an economically sustainable industry. And so there's a tremendous threat right now in terms of these hundreds of billions of dollars in corporate bonds that have been issued by the oil industry. And when the dispute between Russia and Saudi Arabia came up over oil supply in the context of the declining demand in the world economy, and oil prices collapsed. Oil prices, I think, have to be about $50 or $60 per barrel in order to sustain for shale oil fracking industry to break even. Well, it's down now to 30. It's gone down as low as 20, and who knows where it's going to end up. So, you know, what that is a tremendous area of instability in the financial system tied into the oil companies. And I think this is not going to have a happy ending. It's not going to have a good ending. And it's contributed to the problem.
Okay, Susan, do you have anything further? Because you still have some time, or should
No,
I go to
thank
the
you.
next person? Okay, so I'm going to call upon myself, and I wanted to make a comment, and I want Alan to respond as an educated economist, because I'm not. So Alan, if all this financial manipulation that goes on with Treasury, Federal Reserve Bank, and all this loan business didn't actually increase the cost of living for the working class, how is it that 40% don't have $400? And how is that so many people they don't even have a shelter? So my sense is that each time they do this quantitative easing and all that, speculation raises the cost of assets, and that affects the working class in that they get further and further away from the very minimal assets they need to survive. Please comment on that. Am I barking up the wrong tree, or what is it?
No, I think you're right on target. I think when I talk, I focus too much on the quote unquote general inflation rate, which I think is a slightly different question. No question about it. I mean, we're in the Bay Area. We don't have to, look very far to see that this tremendous inequality, the rise of the tech sector, the bloating of housing costs, housing prices, rentals and home purchases, healthcare costs, education, etc. All of this is really a byproduct of this financial bubble that's been inflated. And a lot of the inflation statistics are really not recorded at the level, of what working class people need to purchase in order to survive. So yeah, that's been one side of it is the fact that the cost of living has gone up for people, even though it doesn't reflect itself in the general inflation rate. The other side of it, Raj, though, is compensation, which has remained frozen and even fallen. And certainly the gaps between the high end and the low end have really increased. So I think people have been getting pinched on both sides. And you're very right to point out that, no, it's not like everything's been great in terms of price level. Real wages have really been frozen and falling.
Okay, so I don't see any hands, and we're at about 12:22, if I'm not 12:20.
Yeah.
So we have 10 minutes formally. Dave Walsh wants to have something else, so I'll go to Dave unless, but
and I actually do have, I want to just make a quick comment before, after Dave.
Okay.
No,
Sandeep has his raised hand, so Dave, I'll come back to you later. Go ahead, Alan.
Well, no, I'd rather have the questioners go first, but I do want to say a few things.
Sandeep is next. I'm going to lower his hand and unmute him. Sandeep, you're on.
Hey, Alan, excellent presentation. I stepped out for like 15, 20 minutes, so you may have answered my question. I mean, does the US state have any other option besides doing quantitative easing? Because lowering interest rate is not an option. What else could they have done to sustain the bourgeois system? And a related question is, how long can they continue doing it? I mean, can they do it for the next recession and the next recession? I mean, at some point, this has to collapse. They just cannot keep on pumping so much liquidity into the market.
Yeah, you're onto something. We talked about this a little bit before. First of all, the big concern and the focus a lot is on the stock market. I mean, this is one of the signs of the sickness of the economy and the ruling class. If you read the business press, it's just a maniacal focus on the stock market. It's a lot like a Ponzi scheme that's about to collapse. So a lot of the Federal Reserve, in traditional economics, monetary policy involves lowering the interest rates, which are down to zero and even negative, which has had no effect on the real economy historically, I would say, over the past 10 years, and is not even having an effect on the stock market. It's not pumping the stock market back up. And then the other thing that they talk about in mainstream economics is fiscal policy, government running deficits. We have a $1.5 trillion deficit now in the federal government, and that's had no effect in terms of spurring the economy on. So I think you're right that a lot of the traditional mechanisms that they've tried to use in the past to sort of boost the economy are no longer effective as a result of what's been taking place. As far as how long this goes on, we talked about this a little bit before, but a lot of it really depends on the position of the dollar as the international reserve currency. And in fact, this has a lot to do with militarism and imperialism. It's one of the big reasons, really, what is the US military? It's a force for imposing the political will on governments that might take a step towards any kind of independence in relation to the international dollar-dominated financial system. So if you look at what happened in Libya, what is happening in Venezuela, et cetera, this is why they're so concerned about it. I think that this would be a good topic for, the international component of this. We should talk about it at some point.
Thank you.
Okay, I want to go to somebody who has not spoken, even though John Walsh's hand is up. So anybody who has not spoken so far want to say, please raise your hand, hit your button or whatever. Anybody else before I go to John Walsh, who is somebody who has not spoken? No one. Okay, so I'm going to go to John Walsh because he raised his hand second time. So you're unmuted, John.
Okay, I have a question. The question has to do with how long can the United States just go on printing money? And also, if the United States should carry out the threat to cancel the debt to China, and Lindsey Graham and many others are speaking about that, what would that do to the United States standing in the world if we just canceled?
Well, again, this is something that's come up several times. I think we need to do a separate session on it. But this is the mechanism by which, this is what enables the ability of the government to pay for services, right? These checks that are going out in the mail, et cetera, a lot of this really depends on money flowing in, foreign countries, sovereign wealth funds, Saudi Arabia, Japan, Germany, buying treasury bonds. Because ultimately, if we have these dollars and internationally, we can't really use them to purchase items for import, for a lot of things that aren't produced here anymore, we can't get them for people. But the value of the dollar is really supported on the basis of willingness to of countries to come in and buy treasury bills, which are like treasuries, which are like IOUs. So this idea of somehow just blowing off the debt would destroy the system. It would be like a nuclear option. And I think it would basically cause the whole system to come crashing down. We should do a separate talk on it, I think, because it is really important. This all ties into the decline of the US, which I really didn't have time to get into, and the challenges that are rising to it from countries like China and Russia, et cetera.
Thank you. Thanks.
Okay, so Norma has raised her hand. I just wanted to make
I wanted to make a quick comment. There's something I really wanted to bring out to be. I commented a lot on the economic component of this, but I want to make a quick comment on some political things and since this is the end, I think I hope that it really stimulates, because it could cause a big fight and a big blow up here. But you know, the one thing that you know, I've been spending the last couple of weeks and just digging through the material on the rescue and what's going on, and you know, the really what we have going on here is such a degree of corruption on the part of the U.S. ruling class and both political parties, the Democratic Party and the Republican Party. And you know, if you look at this CARES bill, this is just the most outrageous, corrupt piece of legislation of just funneling hundreds of billions of dollars to these banks, corporations, extending the type of assets that the Fed is willing to buy to all types of companies with just a few crumbs for the working class. Yet, if you look at this thing was passed unanimously in the Senate, 96-0, and House of Representatives, no response, no, you know, Bernie Sanders and AOC got up and condemned the bill, but really didn't organize any real opposition to it. And I think that what this really shows is that in the context of Democratic Party politics, or just general electoral politics, bourgeois, like capitalist electoral politics, there's no way out of this, because this is exactly the same thing that happened in 2008. Now we've got it repeated on an even greater scale today. And frankly, I think it's absolutely, you know, the role of these quote unquote progressive Democrats is criminal, and basically you know, pushing this bill through and raising symbolic objections to it, but doing nothing to organize against it.
On Alan.
You
Alan's
lost?
audio
Can you
is
hear me now?
frozen. Alan's picture
Can you
is
hear me?
frozen. Mehmet, do you know what's going on? Oh, he's
No,
back.
No. He's been talking and we've been hearing.
Let me just say one last thing about that. You know, when in response, you know, everybody knows that there are going to be these millions of people that are going to be thrown out of their healthcare because they're losing their jobs. Well, what was Hillary Clinton's response? What was the response to the Democratic Party? Open up the exchanges. Let's open up the exchanges, right? Okay, so, you know, what does that mean? Well, let's let these people who are being thrown out of work buy these healthcare plans to get health insurance with thousands of dollars of deductibles, right? This is disgusting, right? This is absolutely disgusting. What did Donald Trump do? He stepped in there. He said, look, the federal government is going to cover any shortcomings in terms of payments through the Medicare program. So in a sense, he took a run around the left in the Democratic Party to basically sort of on the fringes, quote unquote, expand the Medicare system to deal with the crisis, when the neoliberal Democrats were trying to get into coddling the health insurance companies, just like they're coddling the banks to bring about a solution. And I want to say one other thing. Bernie Sanders was not the person who took initiative on this. Bernie Sanders backed off from calling for Medicare for all and basically said, look, now's not the time for us to push this. At a time when Donald Trump and his health secretary were saying, hey, let's expand the Medicare program to cover the cost of COVID that we're facing in the crisis. And I think that this really says something about the quote unquote progressive Democrats and the role that they're playing in this whole political game that's going on right now.
Okay, our time is up. Norma wanted to say something. I want to get my instructions from Jean, what to do now. Our time is up. So what do you want to do, Jean? Sorry, I have to unmute you. Yeah, go ahead.
I think we should draw to a close within the next 5 minutes. It's a very fertile discussion, and we will return to it. So,
okay, Norma, since you raised your hand, please make a quick comment or question, whatever, and we'll wrap it up.
I am told that the chat is available to people after the show. There's something that needs to be arranged in order for people to read it. It could be very useful, as I said before. I think Alan was really, I think Alan, many of us agree with you down to the last word. So yes, and we're living in the result of an oppressive society that has been in place for thousands of years and manifest now.
Mehmet, could you address that question of chat?
Yes, we have not done that before, but the system, since we are recording it, and also I think it does save the chat. I've seen it. How to share it, I don't know.
Well, ask Zoom to tell you how to use what's left, what's on the chat.
No, we have the chat. We have the chat.
After the group, yeah, after the screen closes at the end of our session, which has been cut off, by the way, by 10 minutes at the beginning because people were delayed in getting it started, ask Zoom how to get the chat to be available.
Thank you,
Norma, it is available. It is. We have the chat. It's just that how to distribute it or share it, that we have not figured out yet, because it's not a video. We are going to share the video of this meeting, but chat, should we email it to everybody? Should we put it on a site? I don't know yet. That may be, and also some people may not want their, discussion in this group to be made publicly available to everybody in the world. I don't know.
Okay, thanks. I want to make one quick last remark and then we close. What I have observed from healthdata.org, looking at different countries, yes, China has disappeared suddenly, but there are other countries there, is that this coronavirus has a sharp rise and is a sharp decline. It's a natural phenomenon. I don't think it's the genius of one country. Of course, the scale depends on effective measures taken or not, how high it goes, like New York versus California early on. But there is a kind of a natural phenomena of its decline. So I think this is, in the United States, it's going to last for another month or so, though. So whatever manipulation they're doing, they will be able to return that boondoggle economy once again. And Alan, if you want to say something about it, with that comment we'll end, and then we'll give to Jean to close this out. Alan? No?
No,
Okay.
just, real quickly, just the thing about, the United States and UK both have sort of taken the similar, it's something to look at, the similarities of the way that they've approached this compared to countries like South Korea, China, etc., Germany. And it kind of says something about the capitalist system in the center of Western capitalism.
Jean, you have the final word, and then we close.
Well, I really don't have too much to say. We are working on getting this recorded and available to people. None of us are experts. None of us are really.
The last program was available on YouTube, by the way.
Okay. Well, I need to put that into our website under past programs. So there are some things that need to be done. We're still trying to figure out how to do them because we don't have a paid tech person. So anyway, we're doing the best we can, and thank you for your comments.
See you next Sunday, and be safe, everybody.
Bye, everybody.
Bye.
Stay safe.
Don't do too much shopping. It'll save you money and save you from. Bye-bye. Thanks. Thanks.
Bye-bye.